Manish Sonthalia, Vice President and Fund Manager with Motilal Oswal Asset Management, only believes in one word: multi-baggers. He identified Eicher Motors, and Eicher Motors was at 1,000 rupees. Which is the next big one now, Manish Sonthalia?
No, Nikunj, I think from the last time we have spoken, we added City Union Bank to the portfolio, and there's a reason why I have done the same. It's purely on the back of the banking amendment bill which has come, and which increases the voting right cap, from 10% to 26%. So merger and acquisitions in this old private sector banks are a reality, but you could have chosen a Lakshmi Vilas or a Karur Vyasya or a South India Bank. Why City Union Bank stands out is because of its impeccable asset quality, a very diversified loan book, retail lending, low ticket sizes, and a very good dividend yield. In terms of loan growth, it's growing at 25%. His ROE is 25%, north of 25%. And you are buying it at very reasonable valuations of around 1.5 book on an FY14 basis. So that was the last change that I made in the portfolio.
My job to read your mind, but you are able to read my mind. Before I asked you why did you buy City Union Bank, you already have given me the answer.
No, I knew you would be asking me that, so.
What are you selling then?
Okay.
I know you're selling. I spoke to the same dealers. You've been booking some profits in ITC.
No, yeah, I mean, we have booked profits in ITC, and I think valuations were one of the reasons why we have decided to take some profits off the table from ITC. But otherwise, there's nothing wrong with the company. Just on the back of some valuations, increase in valuations on the stock, that we have decided to take some profits off the table.
What did you make of yesterday's selling, and did you offload positions yesterday as well?
No, see, actually, what I feel is happening of the last 2 days is that, see, liquidity is very, very tight. We are just analyzing the M3 numbers, which is the money supply numbers, YTD, fiscal YTD is somewhere closer to 12.5%, 13%. And CPI is running at around 10.5%, 11%. So what I'm trying to say is liquidity is very tight, and post this HDIL episode, people and a lot of the operator types or HNI types or even the hedge fund type have been asking for a list of all pledged shares, companies, etc. So there are a lot of fun and games that's happening, and that's happened yesterday. Whether that warrants a relook at some of those stocks, maybe, not all the stocks deserve the type of hammering that they got yesterday. But I think it's just due to very tight liquidity conditions, and these sort of trades have been triggered. So, but these technical factors don't really last too long, and at the end of the day, you'll have valuations and fundamentals in even all of these companies coming into play, and you'll have some buying interest taking place at low levels. But I think it's the mid-cap pack which is getting hurt more due to extreme tight liquidity conditions.
Manish, but is there anything wrong with promoter pledging? And that's routine exercise. Globally, also, promoters, they often resort to pledging. But why, if this is a very normal practice, companies where promoter holding is pledged, they are getting just smashed out of shape?
Yeah, I know, but I don't know. It's just a perception thing that, if you have pledged shares and on top of that, the balance, whatever free shares you're holding, out of that you sell some shares, which means that, at the company level, you are really facing a very tight liquidity situation, and that gives opportunities for traders, speculators to really make some quick buck out of it, because, the financial conditions, perceived financial conditions of most of these companies are actually on the wrong side. So, I mean, that is what you saw yesterday, isn't it? So, IVRCL, where the promoter holding just about 7-8%, or maybe a HDIL where 98%, or I don't know the exact figure, but north of 90% is pledged, and maybe 2-3%, out of that 2-3% you sell 1%. So, I mean, these sort of signals is what many people in the market are waiting for opportunities. But again, I reiterate that these are just technical factors. You can't really bring about a very big change in stock prices just because of these conditions. You at the end of the day, fundamentals will matter. And some of these companies which got hammered yesterday do have some relevance and some value, left. So maybe this could be looked upon as an opportunity by those who want to buy them.
A week ago, the consensus on the street was that we will go past 6200 or 6250, the previous high before budget. But based on this week's price action, do you think it will be a while before we go past that hump of 6250?
I remain optimistic, Nikunj, and I think we still have a lot of room for the markets to move on the upside before the budget. We are getting all sorts of right news points coming out of Delhi, and this whole big event of 29th of Jan. If it comes in favor of the markets, I mean, there is always room for the markets to move on the upside. I don't think markets have anything to move on the downside because global markets have been supportive. You have foreign funds which are still coming to India. Maybe it could be a top-down funds, ETF fund, but you still have $3 billion that has come into India in Jan. So, I think there will be stock-specific action, but I think direction of the market remains positive. There could not be too big a cut on the downside.
I'm just looking at some of the gainers today, and there's been a bit of a rebound really on the stocks that sold off in yesterday's session. What's the call really on the auto space? Tata Motors has rebound about 2%. Maruti ahead of earnings is up 2% as well. How would you compare the four-wheelers to the two-wheelers?
I'll share this for me.
Yeah.
Yeah, I think Hero MotoCorp was a disappointment. Bajaj was a good set of numbers. Commentary coming out of the management of both these companies seem to indicate that, the Jan-Feb-March quarter is also going to be somewhat tepid. It's four-wheelers preferred over two-wheelers at this given point in time, till we see the current quarter numbers. I think Maruti will report a very decent set of numbers, and given the yen depreciation, there is further scope of margin expansion in the Jan-Feb-March quarter. And should we get a rate cut, obviously volumes are going to pick up, because it's a interest rate sensitive segment, and if you have some interest rate softening, that will have a pull on, passenger vehicles, and Maruti is 40% of the total market share. So I think JLR, again, whatever the management had to comment has got discounted, but they are building capacity of 5 lakh units, and it has a good franchise value. So I think both Tata Motors and Maruti should be on the buy list, and it's just at what prices you want to buy them. But clearly it's four-wheelers over two-wheelers that would be preferred at this current point in time.
Manish, in the near term, what kind of trajectory do you think consumer staples will follow? Now, HUL numbers were bad, they were horrible, they were pathetic, they were way below estimates. But ITC numbers were strong. Similarly, if I map smaller consumer or FMCG names, numbers have been okay.
No, Nikunj, you saw what happened yesterday. When all the mid-cap stocks were falling by the wayside, you had strength coming into, again, these FMCG names. You had the likes of HUL, which moved up in spite of bad set of numbers, or an ITC move up even further. So I think, there is safety in FMCG names in spite of the fact that there are elevated valuations. But the fact of the matter is that you could be seeing just a time correction in some of these names, but at least the capital is intact, whether it be the mid-cap consumer names, the known ones, or the large-cap consumer names. So, there is money which is going to get moved into these names at lower levels. So, if you are holding them, there is no point in exiting them, because just after the time correction gets over, there's again, movement on the upside for these names. So, absolute safety of capital is paramount in these volatile times, and that's a good place to park your money, I would think.
Which means you are not a big fan of high beta names, you're not a fan or you're not a believer that it's time to allocate a disproportionate amount of money into high beta names?
You require a brave heart, to park your money into some of these names, and you could do them with your individual portfolios. But when you manage public money, if the fundamentals are not improving and what I mean by fundamentals is when these companies are actually not making in the profit and loss account, it's very difficult to justify, and there's no visibility. That's the whole point. So I am sure that on a balance sheet basis that these companies are undervalued, but what happens to profit and loss account, and how long would you have to wait before you start to see whether the interest cost comes down or whether revenue goes up, they start to make some decent EBITDAs, etc. These need to be justified when you're managing public money. You can do that with your individual portfolios where you are not answerable to anybody, but public money, absolute no.
Right. Cessa Goa, your view there, Manish?
No, I think operationally, if you see the numbers, it's a loss because they know iron ore production. Even Coke, the Coke segment actually reported an EBIT loss. So it's just consolidation of K in India. I mean, clearly an avoid till you have clarity on how this mining thing is going to get cleared. They have got some approvals on the Karnataka side, but Supreme Court has not yet cleared. So just an avoid.
Are you a believer that it's a good time to buy PSU banks? Bond yields have come down. With whatever policy measures have kicked in, rupee will not weaken, rupee will only strengthen, which means inflation problems will be taken care of. Tactically also, these stocks are looking cheap. In the near term, do you think SBI has potential to outperform HDFC Bank?
Clearly on the valuation side, yes. And what is going to happen in the Jan-Feb-March quarter is that a lot of treasury gains are going to cushion your NPA provisions, So if you were looking at, let's say, a single-digit net profit growth for PSU banks in the October to December quarter, definitely numbers are going to look much better. Now, whether we are already seen the trough of the NPA in PSU banks or whether you're going to see it in the next 3 or 4 quarters is your call. But I would tend to think that we are just about the point where the worst on the NPA front could be there. And, from here things should start to move up. And if this was to happen, you should see actually GDP start to move up and interest costs actually start to come down or rates should come down. And valuations are definitely and has been there, has been supportive for some more time. So, HDFC again, it's a brand of its own, it's a quality of its own, it has always traded at elevated valuation. So you could actually end up owning both, and we are actually owning both of them. We are actually owning HDFC Bank as well, and you are actually owning State Bank of India as well. So I think the banking basket you should be overweight, and we are actually overweight. That is that we have more weight than the benchmark at this given point in time.
Right. We've spoken about a lot of sectors. I don't know whether we touched upon cement because that's gone completely off the radar for a while. Is there conviction still there, Manish?
Absolutely. I remain convinced that, cement stocks will deliver good profits if you were to buy them at this given point in time or even if you have already bought them. And returns would be coming more from the mid-cap names rather than the large-cap names, which are somewhat, at elevated valuations. And this emanates from the fact that, volume should start to pick up. You've already seen the dealers actually hike prices in the Jan month, but volumes have yet to follow. But I think as we move closer to state elections and general elections, you should see actually volumes also start to pick up. And, except for the Andhra region, margins are quite supportive. So, the north and the western players are actually reporting 1,000 rupees per ton as EBITDA, which is quite decent. And valuations, especially on the mid-cap names, are quite supportive. So, I would be a buyer in cement.
Manish, The big event for next week is the monetary policy, Reserve Bank of India Jan credit policy. This time around expectations are high. Now we can endlessly argue whether 25 bips is baked in or 50 bips is baked in. But the bottom line here is that into the run-up of the credit policy, markets expect a rate cut.
But markets are not yet factoring in any rate cut. That's what my sense is. Markets still believe that the RBI governor will surprise with a zero cut. So even if there was a 25 basis point cut, I think markets would react very positively. Now, and markets are actually not factoring in any rate cut even this time around. Even though liquidity conditions are very tight and the need of the hour is for a rate cut, but I don't think markets are yet building in any cut.
So Manish, if we get a 25, what will happen to the Bank Nifty in that case? And if we get a 50, how much do you think the Bank Nifty will gain after that?
I think 5%, the Bank Nifty can really jump 5%, even if you get anywhere between 25 and 50. 50, it could be even more. But 25, you should see the Bank Nifty actually move up by closer to around 5%.
After yesterday's fall, just when I thought that the bulls will go into some kind of an hibernation, you've changed the mood again. 5%, isn't that stretched?
I don't think so. I mean, you are just starting to see the PSU bank numbers come in, right? And, this is one area where the market is concerned about. So if you see the numbers being somewhat decent, on top of that, at least I think the markets are not building in any rate cut. And even if you get 25 basis point cut, which means that March policy also there is a scope for further 25 basis point cut. So actually the rate cut cycle begins. That will give optimism to the Bank Nifty.